Good morning. I would like to welcome all of you on this beautiful Wednesday morning. It is a beautiful morning here to our event today. I'm Kathy Robidoux, Market President and Publisher of the Minneapolis-St. Paul Business Journal. And I'd like to welcome you to our Minne Inno State of Innovation Fintech. Minne Inno is a sister publication to the Minneapolis-St. Paul Business Journal and has been covering, connecting, and catalyzing the Twin Cities ecosystem since 2017. We have our finger on the pulse of all the innovative ideas, significant funding rounds, and big expansion plans coming out of the state. Today, we are going to explore fintech trends in the Twin Cities, new technologies, and dive into what we can expect to see in the future with our panel of experts. Prior to the panel, you will hear from 3 local startups during our startup showcase. Before we get started, I would like to take a moment and thank our sponsors for hosting today's event. Thank you to our event sponsors, Spark and Dorsey and Whitney, and to our gold partner, Bridge Bank. Thank you for your support. A quick reminder that we will have a few minutes at the end of the event for Q&A. So if you have a question for our panelists, please click on the Q&A button on your screen and enter it at any time throughout today's discussion. Now, I would like to introduce you to our moderator for today's event, Carrigan Miller. Kerrigan is a reporter for Minne Inno and the Minneapolis-St. Paul Business Journal. So let's give Kerrigan a virtual round of applause. Welcome, Kerrigan.
Kathy, thank you so much for the wonderful introduction. I am a writer with the Minneapolis-St. Paul Business Journal and Minne Inno, and I publish the Beat email twice a week, Tuesdays and Thursdays. So if you want to stay informed on news and events and job postings in the local startup and tech world, the Beat is a great way to get informed on what's happening in your community. As Kathy mentioned, we've invited a few local fintech startups to give us an informational pitch about their company today. First up is Michelle Marins from We Sparkle Company. Welcome, Michelle.
Thank you so much. Well, I will go ahead and start. So, how many of you know of a small business that's struggling during this pandemic? Sadly, I'm guessing that many of you out there do. And supporting small business is an issue that's near and dear to my heart and why I'm here to speak with you today. My name is Michelle Marins, and I'm the founder and CEO of We Sparkle, a software as a service social enterprise that helps entrepreneurs start and grow their ventures. I'm passionate about helping small businesses because they make up over 90% of all businesses in the US, and they generate 2/3 of new jobs in our economy. Plus, my own mom was a small business owner. She owned a successful fabric business back in Vietnam, but when my parents immigrated to the US as part of the first wave of refugees in 1975, she just didn't feel confident in continuing her business because of all the language, cultural, and systemic barriers that she faced. I always wonder what she could have accomplished if she had, and so I've dedicated my own career to issues of economic empowerment, from studying economics at Harvard for my master in public policy to serving as the chief of strategic initiatives at MEDA, a CDFI named the top minority business development center in the country. My company, We Sparkle, helps businesses shine by leveraging AI-powered technology and conversational commerce to help entrepreneurs save time and increase their revenues. One of We Sparkle's first software tools is a Conversational AI Assistant, or a smart chatbot, that helps small businesses by handling many of their administrative and marketing tasks. Our AI assistant messages back and forth with a business's customers to schedule meetings, answer frequently asked questions, upsell the business's products or services, and encourage customer reviews. This AI assistant can be easily accessed via text message, on the business's Facebook page, or via a chat embedded on the business's website. We truly help entrepreneurs work on their business instead of in their business. We charge a monthly or annual subscription fee for business owners to use our platform, which provides them a dedicated business phone number, a website where they can sell their products and services with contactless payment, and the AI assistant to help them with those repetitive administrative tasks. We also charge a small transaction fee on products or services purchased through our platform. Lastly, we offer an enterprise level option for business support organizations who want to provide our tools to their members. All of our tools are easy to use and affordable for even a solopreneur or a sidepreneur, and our customers report saving between 1 to 5 hours a week in time. And as you know, time is money. If you or someone you know wants to start or grow a business or a side hustle, we encourage you to check out WeSparkle.co for more information. In the past, our team has built tech products and developed digital strategies for organizations like Google, Target, and the American Academy of Neurology. And now we're excited to equip small business owners with the AI power tools they need to succeed. If you're interested in investing in WeSparkle, please email me at michelle@wesparkle.co. Thank you very much for letting your light shine and helping others to shine so that together we sparkle.
Michelle, that was wonderful. Thank you so much. All right, up next is Phil Terrell from SoulSafe. Welcome, Phil.
Awesome. Thank you, Kerrigan. So I'm Phil Terrell. I'm the co-founder and CEO of SoulSafe. From 1985 with the Air Jordan 1 to today, a new asset class has emerged in popularity, but more importantly, they have increased in value, a lot of value. Just in the US today, SoulSafe has an available market within the primary or new sneaker market of approximately $21 billion. The immediate attainable market is the secondary or resale market, estimated at $2 billion and growing at 20% year over year. This resale space is where the higher end sneakers are bought, sold, and traded for multiples well above their retail prices. For those curious minds, the opportunity within the cultural asset community, such as trading cards, streetwear, and even NFTs, which I'm sure you've heard about lately, is on our radar, but not something that's currently our immediate focus. But to put the sneaker opportunity in a bit more context, one large resale platform sold just under 7 million sneakers in 2020, which really equates to about 15 sneakers a minute. Now imagine if one of those sought after sneakers worth $1,000 or 4 to 5 times its retail price got damaged or went unprotected. SoulSafe is the first specialized insurance product specifically designed for sneakers. Our solution provides real-time intelligent appraisals and valuations with dynamic insurance coverage to protect this new asset class. Once insured, these assets will have a unique digital record built on the blockchain. The SoulSafe journey started when myself, who has a collection right now in this iteration of around 200 sneakers, or really an estimated value between 30 to 40 grand. I even have my first sneaker. The SoulSafe team includes Fortune 50 technology experience, technical and creative product design, entrepreneurs, actuarial experience, and of course, resident sneakerheads. We are preparing for our seed round right now. We'll have our MVP, at least on the front end experience, in a few weeks. So I'm excited about that. And then we'll have the full baked version later in July. For us, SoulSafe is asset protection built by sneakerheads for sneakerheads. To follow the journey, definitely check out our waiting list at soulsafe.co, or you can follow us on some of your favorite social platforms. Thank you.
Thank you so much, Phil. I wish you'd come up with that idea a few years ago, because the only pair of Jordans I've ever had are completely destroyed now. So I could have used you in 2017. All right, representing our last startup is Leslie Valencourt from Checkerpay. Welcome, Leslie. And take it away.
All right. Thank you so much, Kerrigan. So have you ever received an email or saw a social media post from a charitable organization that moved you to want to give a donation, but when you clicked on the link to give, the donation form was so long and complicated, you figured it wasn't worth the bother? Friction in the giving process is a real problem that deters donors from giving and prevents nonprofits from maximizing donations. I'm Leslie Valencourt, founder and CEO of Checkerpay. Checkerpay is a Minneapolis-based software company that provides modern online fundraising services for nonprofit organizations. Our goal is to eliminate friction in the giving process so that donors can give quickly and easily, and nonprofits can benefit from increased donations. So how do we do it? What makes us different? We are a mobile-first fundraising platform. That means that Checkerpay was designed with mobile devices in mind. But don't worry, our solution works great on computers and tablets too. We've integrated mobile wallet technology into our solution so donors can give in as little as 25 seconds using Apple Pay and Google Pay. On either a mobile device or a computer browser, it's now possible to make a donation with just a few clicks. Other giving options include credit card and bank transfers. We've integrated with Plaid, the same technology used by Venmo, to connect directly to your bank and make payments super easy. But that is not all. With Checkerpay, nonprofits can fundraise online, but they can also take their fundraising offline too. I'm sure you've all noticed the QR code next to me on the screen. With Checkerpay, every campaign comes with a custom QR code. This code can be used just about anywhere. At events, you can project it on the screen, just as we're doing here, print it on signs, posters, programs, and flyers. You can even include it on your direct mail appeals to accept donations right from the mail piece. If you have a mobile device with you, I invite you to scan this code to see a live donation page example from one of our clients. This campaign code is for Lunar Startups, an awesome local startup accelerator supporting BIPOC and women-owned businesses. I invite you to make a donation to support their program and experience the ease of our software firsthand. If you'd like to learn more about Checkerpay, visit us at checkerpay.com or reach out to me at leslie@checkerpay.com. Thanks so much for your time today.
Thank you so much, Leslie. Let's give a virtual hand to all the startups that have shared with us today. Those are 3 really cool companies, and even if this is the first time you've heard of them, it won't be the last time. And it is now time to introduce our panel. So please help me welcome Erin Bryan, who's a partner at Dorsey and Whitney, Nick Elders, who's the CEO of Spark, and Cale Johnston, who's a principal product strategist at Q2 and was, until very recently, the CEO of ClickSwitch. So welcome, panelists.
Thanks for having us.
Yeah, and we'll just start by doing introductions. Nick, would you like to go first? Say a little bit about who you are and what Spark does?
Sure. I'm Nick. I'm the CEO at Spark, and we help small business lenders digitize their loan origination processes.
Great, thank you. Erin, would you like to go next?
Great, thank you. Hi, I'm Erin Bryan. I'm a partner at Dorsey and Whitney. We are an international law firm headquartered in Minneapolis, and I'm co-chair of our consumer financial services group and also a member of our banking industry group. My clients and I advise on banking and other financial services matters around the globe. And because we represent both fintech companies and traditional financial services companies that engage in transactions with fintech companies or are developing their own technology, we end up with a 360-degree view of the issues that impact fintech and the financial services sector. So I'm very happy to be here.
That's great. Thank you for being here. Cale, last but not least.
Yeah, Cale Johnston. I'm the founder of ClickSwitch. I started ClickSwitch back in 2014, and what ClickSwitch is, it's an enablement tool that helps a customer switch their direct deposit and recurring payments from their old account over to their new account when they open up a new checking account. So we work with financial institutions of all sizes, community banks, credit unions, tier ones, as well as challenger banks to just deliver a profitable and primary checking account. And we work with just over about 500 financial institutions all across the United States.
All right. So the first question I'd like to ask you, which is maybe the most obvious question, is how has the COVID-19 pandemic accelerated or changed the way companies are using financial tools? And Cale, let's just stick with you.
All righty. I think, you look back, it used to be digital banking, and what COVID has caused is, digital is banking moving forward. And, you look at all the IPOs that have happened, all the fintech IPOs that have happened late 2020 into 2021, you had fintech companies or digital companies that were growing maybe 25, 30% year over year. And now they're growing well over 100% year over year. So I saw it in our own business when, a lot of people were switching their bank accounts when they would walk into a branch and sit down with a banker and get switched over. Well, that that dramatically changed last March. So we had to go digital ourselves. And what's happening is there's more collaboration in fintech. So you're seeing a lot more acceleration. Like we were collaborating with more and more different platforms so we could target end users a lot better because we were missing that in-branch conversation that was happening. So fintechs have been collaborating more and more over this past year. A lot more partnerships have been formed, which has really helped accelerate a lot of that growth that's happening in fintech right now.
Sure. Erin, where have you seen changes in the way financial technology is being used?
Yeah, I completely agree with Cale. I've seen some of those same trends happening with our clients. In terms of a legal perspective, a lot of our work has been supporting banks and non-bank lenders who are getting into the PPP and small business lending space. One really interesting thing that happened during the pandemic that was a surprise to a lot of traditional players in the industry was that Cross River Bank ended up being third among all banks for extending PPP loans. And that's really been attributed to their reliance on fintech and their partnerships with other fintech entities. So that's been really exciting to see. It's definitely a disruption for the industry. Another thing that we've seen that is a little bit more of a risk for all players in this space has been an uptick in fraud. We're seeing both people trying to take advantage of some of the changes that happened during the COVID pandemic and the transitions that more traditional players were making to online platforms in order to, bring their fraud online. And so we've had a lot of calls from clients about how to deal with that, potential money laundering issues as well. And then also data security has been heavily covered in the news, most recently with the Colonial Pipeline hacking. But this is a really big risk in the fintech space, particularly where consumer data is involved. So we're seeing a lot of companies investing heavily in beefing up their data security to make sure that they are at the forefront of protecting themselves and their customer information.
Sure. Erin, just to ask a follow-up, I mean, when you looked at the banks that had given out the most PPP loans, I was surprised to see they weren't the banks with big downtown offices. They were a lot of these smaller, more nimble organizations. You think a lot of that was because of their effective use of technology?
I do think so. Yeah. I mean, there's going to be research done on this for years to come, but that does initially seem to be the biggest driver. Some of the larger institutions were equipped to do a high volume of online transactions very quickly, but traditionally in the commercial banking space, there's been more of a focus on relationship managers, and it's been a little bit slower to adapt to some of the financial technology. So some of these newer platforms were better positioned to step in to assist with that. And I think the traditional banks that either had developed some of that technology already or had partnerships with fintech companies that could help them process quickly. And also with some of the back-end support that's required for all of this. It's not just a matter of evaluating an application, but it's doing all of the know your customer reviews and all of the onboarding that has to happen, as well as, payment processing and everything else.
That's great. Thank you. And getting to you, Nick, how have you seen use of financial technology change because of the pandemic?
Yeah, the best way to think about it from our perspective, I think, is like there's always this meme floating around out there, like who's responsible for accelerating your digitization strategy, your CEO, your CTO, or COVID-19? The answer squarely was like COVID-19. I think when we saw it, in the digital lending space specifically, it was like an imperative, like that you could know the call to action in most organizations, especially in banking, was like, hey, come into the branch and let's talk it. And now it's like with all the branches shut down, like no way to go in, like it was, you had to switch to a digital platform to do anything and engage. So especially if you're going to do it at scale, and Erin touched on that, was like you kind of saw the power of technology happen really quickly when COVID hit and PPP hit, and all of these businesses came to say, we need help. And all the lenders kind of stood up and said, okay, we can help. We saw some build their own quickly, and some teams did that really well just by adopting agile methodologies and kind of switching to like a product focus. Like that was hard for banks to do, but some did it. we saw there's, buy and partner, and then we saw just some used providers. So it was a really interesting point in time. I think the other fun thing is just like what we're doing right now is, we've all just moved to this like online world now where we don't see each other face to face, and it feels like some of the platforms kind of won. It feels like Teams won, Zoom won, and like GoToMeeting and WebEx like lost. And it was like WebEx lost because like they just broke their tech one day. You couldn't use virtual backgrounds anymore, and it was like they blamed you, like, oh, your computer is wrong. It's like, no, you guys did something here and it just didn't work. So it was a really interesting thing, but we all just kind of adopted it and went, and it shoved all of these users at all of this tech really quickly. Some succeeded and some failed.
A year ago when we had this meeting, it would have been on WebEx. So maybe there's something to that.
There you go.
And this kind of leads into my next question, which is what's next? We've gone from taking a picture of your check and cashing it that way to Venmo and Zelle and Cash App. What other steps of this process can be digitized, Nick?
Yeah, I think about it like, so I don't feel like there's much left in terms of like the primary interactions to digitize. Right. Like those are so it's almost like you're going down to like second layer stuff. So some good examples there are like, maybe the next thing that happens is typically we deal with a lot of like lenders that are doing secured lending, and that's a little bit more complicated than unsecured lending, as an example. So one of the things that lenders often do, just as a really specific example, is like when they're gonna offer a loan to a small business that's secured by a piece of machinery or equipment, they're gonna file a UCC, which is a Uniform Commercial Code or something like that. Essentially it proves ownership. Well, there's all sorts of different ways now to prove ownership. And so, blockchain being like the easiest, most primary example. So and UCC filings today are mostly done primarily with paper, and then like filing with the Secretary of State and all this other stuff. So all these things like are candidates now for this next layer. I think somebody already mentioned like NFTs, like those can get tied now to assets. Like now we can prove ownership that way as opposed to UCC filings. You think about other things too, like where all this data is living. Zillow, people have to do like commercial real estate appraisals. Well, why? But Zillow has all of that data. Why can't we just use that? Or why aren't they? There's all these. I think it's just the next layer stuff that you're going to start to see apps come in and focus on and drill into and then digitize.
If I can jump off of that, Nick mentioned the UCC filings and the sort of proof of ownership or proof of your security interest that would allow you to take that equipment back if the borrower doesn't pay. But right now there have been a series of meetings with the Uniform Law Commissioners, which is a group that oversees these codes that get adopted by the local states. And we're having meeting after meeting about what to do about digital assets, how to modernize the system. And it's really fascinating to hear, law professors and economists and practitioners come together and wrestle with some of this. It's far more complicated than I ever would have thought. And there are a lot of people trying to get it right, but to be honest, I still have quite a few concerns that we're just not going to get there in time. The technology is developing more quickly than the law is, and we're really just playing catch up as much as the legal profession is trying to stay ahead of this.
So Erin, are we talking about the repo man coming for your NFTs?
Yeah, potentially. We do have a framework in place right now that does allow us to establish, who owns a digital asset, but there are some gaps in it, and sometimes you don't see where the gaps are until the litigation happens, and nobody wants to be the test case for litigation. No company wants to be incurring those costs in order to deal with this. So it's really in everybody's interest for the technology industry and lawyers and government officials to be working together to get ahead of this, to offer some predictability as businesses are growing. We don't want to be coming in after the fact and saying, having some judge say, well, we don't like the way that you did this. Sure, the law wasn't clear, but here's what I think you should have done. You know, the better outcome for everybody is for us to be having these conversations early on and developing a framework that makes sense for the people who are developing and selling the technology, as well as for, you know, the legal system that might have to deal with conflicts between parties.
Sure. I'm gonna put a pin in this, but first, Cale, what do you think is next to get digitized?
You know, what's next is a dangerous game, but you know, these community banks and credit unions need to get competitive with these challenger banks and neobanks that are popping up. And I think we're going to see better predictability, better technology within community banks and in credit unions. One thing in particular that I think is going to get digitized is just the lending process of, you know, getting your mortgage or your auto loan. You know, when you open up a bank account, you log into online banking for the first time. We're going to see some of these community banks that have a pop-up screen that says, you know, we see you work at X, Y, and Z. ADP is your payroll company. Enter your ADP username and password to qualify for a loan. And so they enter their ADP username and password, they hit submit. These banks can go in, they can scrape the information, they can pull the pay stubs, they can pull the W-2s, and they can provide you better lending predictability. So I think we're going to see banks get more aggressive there when it comes to lending because it is more competitive, and you're going to see more of a Plaid for payroll type model. You know, Plaid's doing a lot of work with Venmo and Cash App and all of those to link your bank accounts, and they're linking bank accounts through enter your bank account username and password. That same technology can now be implemented for financial institutions to make better lending experiences for their end user. A customer shouldn't have to log into their ADP and pull their W-2 and pull their pay stubs and then submit it through an email to your banker. I think those days are coming to an end where a bank is going to be able to provide you better decisioning right away through technology.
Sure. What are the privacy concerns around that? I mean, giving everyone all of your information, you know, suddenly everyone has my ADP, everyone has my bank account. That makes me a little nervous.
I know it does, but what's going on is ADP knows that they need to be competitive with Intuit. They know they need to be competitive with Gusto. And so you're seeing more startups that are forming relationships with ADP because, you know, if ADP doesn't play a game, they're going to create a backdoor experience where you can still just enter your username and password, scrape the information. ADP wants everybody to come through the front door. They want to make sure they're a verified user. So you're seeing more rails being set up with these payroll companies to extract the data in a more efficient way for the end user. Same way Plaid had to go about it. You know, Plaid started pulling information and then they started partnering with more financial institutions. I think you're going to see that same thing happen with payroll companies.
Sure. It's better if they're partnered with each other officially rather than unofficially.
Exactly.
All right. Well, this kind of ties our two threads together here, which is, you know, Erin, I want to move back to you. What are the regulations and legal hurdles of the fintech world? You know, how regulated is this stuff? Are we 10 years behind or what?
Yeah, well, I mentioned earlier that regulation and lawmaking tends to lag pretty far behind marketplace innovation. And, you know, some of the major financial regulators have been trying to change that. They've been, you know, offering programs to partner with innovators early on. And I'll mention a few of them that might be of interest to our audience. But before that, I do just want to, you know, add one caveat to this conversation that banks and non-bank lenders have learned over the years, which is that some of these regulators are less likely to set aside their enforcement focus for the sake of supporting innovation. So there does need to be a careful balance between developing good relationships with your regulators and not simply showing your cards in a way that could lay the groundwork for future enforcement actions. So, you know, this is an area where I think fintech should tread lightly. You know, there are some opportunities here, but you should be working with experienced legal counsel that does have that regulatory background in order to make sure that the information that you're sharing is not going to come back later to bite you in an enforcement context, because that does definitely happen. And enforcement is very political as well. And so, you know, depending on, you know, who is in a particular HG's office or, you know, who is leading the executive office, the focus of regulators can shift pretty dramatically. And so you might have a, you know, a good supportive relationship one year and then something changes and all of a sudden your industry is, you know, has a target on its back. So So there is some opportunity here, but it's also an area to proceed with some caution. So, the agency that I work the most with is the CFPB, the Consumer Financial Protection Bureau, and they regulate everything relating to consumer finance, both for banks and non-banks. They have really broad authority to enforce all kinds of consumer protection laws. One that comes into play quite a bit in this space is Dodd-Frank, which has consumer protections for unfair, deceptive, and abusive practices that affect consumers. So that's really broad, and it's very much in the eye of the beholder. And we've seen, the CFPB historically be very aggressive in some of their enforcement there, particularly where they see disparities or confusion affecting customers. Also, fair lending laws are a big focus, and that's something that the regulators have been talking about quite a bit this year, making sure that all people have equal access to credit, regardless of race or ethnicity or other protected classes. So the CFPB has joined with state AGs to launch what's called the American Consumer Financial Innovation Network. And the concept behind this is for state officials and regulators to join together to facilitate innovation that would benefit consumers through coordination and also promote regulatory certainty for innovators. So that is somewhat promising. They've also said that they're going to work toward offering more regulatory sandboxes, which is, basically having a framework where you can develop a product with a regulator's oversight without risk that they're going to come after you, based on what you're developing. And then also issuing more no action letters where a company can approach the regulator and say, hey, if we brought this product to market, would we get sued for it? And the regulator can say, we don't think that we would sue you for this, or yes, this would be very problematic. As I mentioned, there are some risks in going to regulators with these types of questions because you are laying all your cards on the table and also making, putting yourself on the radar of the regulator, which, it's not always where you want to be as a growing company. But it also can be a good opportunity for people who have really cutting edge stuff where there just isn't a legal framework for it yet, and there's no way to predict how regulators would approach it. The OCC is the primary bank regulator. They're also offering some similar things. They've been in hot water lately because of their Fintech charter, which some folks may have heard about, but essentially offering a bank charter to non-depository institutions, meaning companies that don't hold deposits like checking accounts, savings accounts, that kind of thing. And this has put them in the crosshairs with state regulators because state regulators say, well, we don't want everyone to have a bank charter because that means you get to regulate them, not us. And so they don't like that very much. So the New York Department of Financial Services is one of those groups that has been suing them to try to stop this from developing. So that will be really interesting to watch how that plays out over the next few years. And then of course the CFTC and SEC have both been trying to get into this as well. Kind of a mixed bag there. I think we've all followed the Robinhood saga this year. I won't go into too much detail on that, but
that's good television.
It's very good television, very good, interesting reading. Just kind of a classic confluence of some really interesting, innovative ideas that, maybe were not fully fleshed out before it went to market. But the SEC came down very hard on Robinhood as a result of the well-publicized issues that they had earlier this year. So.
All right. Thank you so much, Erin. Nick, what has your relationship been like with regulators?
Yeah, I think the way that we typically experience it is through our customer to their regulator. And so it's more, I think the way we approach it is more from like a level of understanding of the types of scrutiny that they are under at all times, because we live in this kind of enterprise banking world. So where it shows up in our world is, to be a vendor to somebody who's under that type of scrutiny, you yourself have to have your own kind of house in order. So that means you're going to have a SOC 2, and you're going to have to publish your financials, and you're going to have your disaster recovery and business continuity all buttoned up. Like all of these things that you're kind of you're getting through the vendor management of the bank. That's typically coming from some sort of regulatory body telling the bank, this is how you need to look at your vendors and how you need to align them. We also kind of see it, showing up in the products that we build. So, just a good example is like the project that no one ever wanted to work on but got done was like compliance with Regulation B of the Fair Credit Reporting Act. Like, you're sitting there like kind of going through these mind-numbing things of like, and it's different for different banks. So it's like some people do it some ways, some people do it the other way, and we're trying to like get stuck in the middle. But what you're trying to do though is help them with their compliance, and you're sort of like you're like RegTech, but like not really, but you are. I mean, to be an effective vendor, because you also have to help with anti-money laundering and know your customer and all of these other things that again are coming from the regulatory bodies to the customer. To be a solution provider and a good one, you have to help automate that journey in some way, or at least assist. And so there you're starting to like build integrations to like people that do this, like LexisNexis and all these credit reporting agencies and all these other things. So that's the way that we typically see it, is understanding what the customer is going through and then trying to build solutions to that framework. That's typically how we experience it.
Sure. Do you feel you are appropriately regulated?
As a solution provider, it's interesting. I think had it to do all over again, I'd probably start a SOC 2 company, because it's like you do a report once and then you just charge everybody 25 grand a year just to like renew it. It's like what? And then the challenge is like nobody reads those things anyway, and so and then you have to go fill out some other survey that exists in the bank that says the same thing your SOC says. And it's like, so there's probably an opportunity for like a clearinghouse of some, something here that where you get this kind of like stamp of approval that you're a good quality vendor. I do understand. I mean, heretofore there hasn't been like a major breach in a bank for all of these reasons. So there is something to it that is good, I think, for the bank and for us as consumers. But from a solution provider's perspective, I do feel like we're appropriately regulated. But again, we're not a lender, so the bank is the lender.
I think you just gave someone in the audience $1 billion idea.
Well,
Cale, what does your relationship with regulators look like?
Well, I echo a lot of Nick's thoughts there. I mean, we work with over 500 financial institutions. We sign about 10 net new banks a month. And so we have a team of people that are just filling out diligence requests all day and surveys all day, and all of them are different, right? Citibanks is going to be looking for different information than Wells Fargo. Wells Fargo is looking for different information than Wings Financial down the street. And so it is a complicated process that all of these fintechs are going through, but it makes your company stronger in the long run. Like in the early days, we might have got a one-page diligence request with a couple questions. When you're going and you're signing Citibank will hire a third party and they'll come in and they'll do a pen test on you. They'll do an architecture review on your architecture to make sure there's no holes. And if they find a hole, you got to fix it before you go live. So some of these big sophisticated banks, they have the resources to come in and hire their own teams to make sure that these fintechs are regulated and do have the right processes in place. If you're just working with smaller community banks and credit unions, they don't have the resources to do that. They don't know if you're lying on your report. They don't know anything like that. So it is important, like Nick said, to go out and get your SOC 2 type 2. For a long time, we just had our SOC 1 type 2. And as we started working with bigger banks, it was like, no, you need your SOC 2 type 2, and we're just don't even bother showing us a demo. So there is more knowledge base in the industry to kind of hold fintechs accountable. From a regulation standpoint, I think we're going to see two interesting kind of things play out here. One, you have the challenger banks going against tier ones, and the tier ones like JP Morgan Chase is saying, wait, Chime, who was opening 250,000 checking accounts a month, they're not regulated like Chase. And you're seeing, Current goes out, they have 2 million customers, they get a $2 billion valuation. And Jamie Dimon is like, hey, this isn't fair. They're not regulated like me. So you're going to start seeing this kind of war of regulation going on. Now, the challenger banks do have underlying banks that hold them accountable, and they're going through that, and they're vetting the vendors that are coming on. But I will say, when we work with a challenger bank, we get our stuff turned on a lot faster than when we're trying to sign a tier one financial institution. So speed to market with challenger banks is beating these tier ones right now. And there's going to be some friction there. And there's going to be people pounding on the table saying you need to start regulating challenger banks like Jamie Dimon's being regulated. And typically when he speaks up, you see some action there. The other thing is, you look at cryptocurrencies and NYDIG, which is a Bitcoin provider to financial institutions. They're just a startup. They went out and just did a deal with FIS, and their FIS is going to turn a Bitcoin on for a lot of their core-based customers. How is that going to be regulated within online banking as well? So there's going to be a couple interesting things play out here within regulations that it's going to be interesting to track here.
All right, we've made it 40 minutes with our first mention of Bitcoin.
I didn't think I would be the one either.
I have to say, I'm kind of proud of us. One thing that is interesting to me is when I'm speaking with other kind of tech sectors, a lot look to fintech as kind of a success story, right? Where especially healthcare tech, digital health companies will say, look at what fintech has done in the past 10 years. Let's do that for healthcare. Being reflective, I'm not trying to puff you up, being reflective, do you feel fintech has been a success story, and do you have any advice that you could give to, say, health tech companies who are trying to undergo a similar transformation there? Nick, would you like to start?
Sure, I'll take a crack at it. I mean, I think the risk that people have is if you isolate technology alone by itself and kind of classify it as this like silver bullet strategy. It just doesn't work that way. So like the way that we break it down, and maybe there's a question that Rich Bracken sent into the chat, and maybe there's kind of some overlap here, but we kind of break it into like 4 parts, which is sort of like the people, the process, the technology, and then how that ultimately translates to like the customer experience. And so if you're not thinking about it in that kind of holistic view, that's where you kind of run a risk. So like, oftentimes where if you don't know what the process is, it's very hard to fix it. Or if you go and automate a crappy process, you're going to get a crappy result just much faster and a lot more of it. So it's sort of like you kind of have to make sure that these things, you're not kind of solving for something sort of in a vacuum without understanding kind of the broader look at it. That in terms of like, so things I would like think about is like, make sure you understand the problem that you're solving. Make sure that you really like solving that problem, because once you solve it, you're going to unlock a much bigger version of the same problem. So it's like, be very confident in what you're trying to do.
Erin, do you have any advice for our tech cousins out there?
I do, yeah. And I mean, of course, as a lawyer, I'm going to say this, but I do think it's really important to involve your legal team early and often. It is important that you find counsel that shares your vision and can offer, more pragmatic and solutions-oriented advice, not just like, oh, this is a bad idea, the sky is falling. That's really not helpful. But you do want counsel that, is going to get excited about the idea while also identifying potential legal and regulatory deal breakers. We've seen problems where companies go through multiple rounds of fundraising without having fully assessed the legal viability of their key product or service. And nobody wants to get a startup off the ground just to receive an investigative demand for a regulator, or, within a few years get served with a complaint for a class action lawsuit. So, sometimes just a small pivot can make a really big difference. And as a lawyer, what I want to do is to be able to partner with fintech clients early to make sure that I fully understand what you're trying to accomplish and help you identify the various legal steps that you need to take in order to get there. So that's my big advice for other types of entities getting into this space.
Sure. Cale, what about you?
I agree with Erin totally. I mean, when we first started our company, we knew we were going to have to move money from a direct deposit standpoint. but do you want to be known as a money mover in that regulation, or can you be looked at as more of a facilitator, or you're initiating a process to kind of slide under different regulation thresholds that are out there? So it is important to seek legal advice right when you're starting to figure out your terms and conditions, all that important stuff when communicating with an end user or a financial institution or a healthcare provider, whatever that may be. And you are seeing, I don't think fintech was even coined in 2014. So you look at from the last 7 years of what happened in fintech and all the startups that have emerged just by taking, like what Nick said, they're taking paper-based processes and they're digitizing them and they're creating companies out of them because they knew the banking industry was just behind from that perspective. So you're going to see a lot of that happening in healthcare tech as well. So just, seek legal advice. If you are taking a paper-based product and you're digitizing it, making sure you're going through the right rails, there might be a better way to do it from a language perspective that allows you to get to market a lot faster, allows you to speed up your deal time. You don't want to be stuck in compliance for 6 months. You're not going to make payroll. You're never going to get to the level that you're going to make because you can't drive in the revenue. So just kind of take care of the basics, take care of your foundation in the beginning, or else it can be expensive in the long run.
It seems like a good rule of thumb for any tech company is if you can digitize a paper process, you'll probably do well, right?
Exactly.
One question I'd like to ask you is, as technologists and people who are involved in the financial sphere, how do you make products and services that are accessible? Where, obviously the financial industry has had a long history of being inaccessible to, different groups of people in terms of race and things like that. And, tech doesn't have the best industry either. So how do you bridge that gap? Nick, would you like to start?
Sure. So I think, for us, that is one thing that is a big concern of ours is because we're kind of like sort of like network effect, like whatever we're doing, like everybody else on our platform is doing, we're kind of this one-to-many relationship. So if we're turbocharging like racially biased products and services, that's just going to get out there faster. So we think about it all the time, and we do ask our partners, how are you ensuring that this credit model that you're using isn't discriminating against some part of society? Like, how do you know that? They don't have the best answers for that right now. The way we go about it at Spark is, we focus on hiring diverse team members and building diverse teams that way. Because our concept is like if diverse teams exist, we'll have diverse viewpoints and diverse products and services will come as a result. There's another thing that we are doing inside of our company as well, which is elevating diversity, equity, and inclusion as a main driver in the company, and just having programs around it. So in one of the groups that I'd like to just recommend to everybody is the Racial Equity Institute. They have an amazing program that really talks about the systems that exist in our society, and they kind of use a sort of like a fish, a lake, and a groundwater analogy. So you kind of walk up to a lake and you see a dead fish, you're like, wonder what happened to that fish. You walk up to that lake and you see like half the fish are dead, you're like, something's going on with that lake. If you walk up to like 5 lakes and in all the like 5 lakes all the fish are dead, you're like, there's something wrong with the groundwater and all. So it's like, and if we're not treating the groundwater and instead we just go and treat the fish, like, and you put that fish back into the toxic system, it's just going to die. So like, their whole point is like, you got to get down to these like groundwater solutions and be working down at that level, because all of these systems, education, healthcare, finance, legal, all of these things are connected and they're all producing the results that they're producing. Which unfortunately are producing adverse results for people that are not white. It's a challenge that we face, and again, we're trying to do it through the lens of small business, because we think small business is a pathway to prosperity, especially in low-income areas. It's also out there. We couldn't hear you, Kerrigan, for whatever reason.
Sorry. Can you hear me now? I was just passing the question on to Cale.
Yeah, you look at our mission statement. If you walk into our office, it's all about empowering consumer choice. And I think for so long, people just, their parents opened them up a bank account in their hometown, and they just never moved their bank account for whatever reason. And those days have now passed. And for us to be able to work with challenger banks and see a different account holder or a different user, and still to provide that user with the availability to say it's your money. If you want to move 20% of your paycheck into a Chime account, you should easily be able to do that. We also work with prepaid card providers such as Green Dot and NetSpend, and a lot of their customer base they live paycheck to paycheck, and they literally still get a physical check, and they're walking into a check casher and they're loading those funds onto a card. They shouldn't have to do that. Their employer should be able to load those funds onto a reloadable card. So our whole mission is empowering consumer choice and making sure banking should be simple. Banking should be easy for everyone. And whether you have an account at a community bank or credit union, whether you moved from New York to San Francisco, you should be able to set your finances up very, very easily. And that's what we do. We come into work every single day with that mission to empower consumer choice and to make financial institutions competitive and profitable for all.
Sure. Erin, what advice would you have for companies that are trying to make their products more equitable?
Yeah, I echo everything that's been said so far. Having a diverse team in place is definitely the starting point. Also, though, we can't assume that our good intentions are enough, even in creating, apparently neutral technology, because we've seen time and time again that technology seems to absorb the biases of the culture at large, and then it gets expressed through the way that those services are offered to consumers. So this does require not just creating a product with the intention that it's, for example, going to close the wealth gap or serve the unbanked population, but also going back and testing and saying, are we achieving those goals? Are we getting the customers we thought we would get? Do we have a race spread that is proportionate to the population, or do our numbers indicate that we might have problems here? This is a legal risk in terms of fair lending and similar types of laws, but it's also a business risk, right? Because there are huge growth opportunities by closing the racial wealth gap in this country, and huge growth opportunities by assisting, for instance, Black-owned businesses and getting a greater share of the market. So I look at it as a combination of both a business and legal risk, and start out with the good intentions, intend to be anti-racist, build intentionally diverse teams, but then don't assume that alone will get you there. Do the work to look back at where you're going. Is your leadership reflective of the overall makeup of your organization? Is your product being used across groups? And challenge yourself to improve year over year. That's something that the legal industry has been struggling with for a long time. And so I don't mean to suggest that we are any further along in this. Some of the things that my firm has been doing, we're very intentional in our recruiting, making sure that we're recruiting at law schools that are also diverse, not just assuming that we should just be recruiting at local law schools, which, might not be as diverse as the overall population. And then also, really focusing on retention and advancement and trying new things. If we try something and it doesn't work, don't keep saying, we just need more mentoring. That's not always the solution. So, listening to people when they bring ideas forward. One thing that my firm did that I thought was fantastic within the last couple of years was to listen to diverse attorneys. I'm a member of the LGBT community, so I was lucky to be part of these conversations, but our managing partner said, what are some of the things that we can do to help up and coming attorneys really feel supported by the firm if they are also, an attorney of color, LGBT, a woman with children, other groups that have historically had a harder time making it through the ranks in this profession. And one thing we said was, we're doing all of this diversity work and it's essentially unpaid. We're being asked to speak about our identities, to, mentor other people, to go out into the community and represent the organization as, a diverse person, whatever that means. And we don't feel that we're being compensated for it. And so one thing that Dorsey and Whitney did was say, we're going to give you 50 hours of billable credit each year for that work that you're doing that's currently unpaid. So, essentially this will, if you choose to do this, we're not going to make you do it, but if you choose to do this, we will treat that work equally to work that is being billed to our clients, which is usually how you're measured in a law firm. So I think thinking creatively like that, and listening to, both employees and customers when they come forward with ideas, and not just saying like, well, we've never done that before, but really listening and trying new things will move us forward more quickly.
That's great. I love that billable hours idea. I've never heard of something like that before. That's really smart. By the way, for our lovely, wonderful audience who we can't see, but we know you're there, we feel your love. Q&A is open, and we're going to get to those questions very soon. So if there's anything you would like to ask our awesome panelists, please shoot that down below. There should be a Q&A button kind of at the bottom of your chat. But I would like to ask one more question, which is Minneapolis, St. Paul, Minnesota punches above its weight for fintech. Why is that? Cale, would you like to start?
It really does. And again, going back to 2014, there wasn't a whole lot of fintech, and you're seeing more and more. And I think, when it comes to resources, there's a lot of good engineers here. You can do it at a way more cost-effective rate than if you're in New York or San Francisco or Austin, where you see the other big kind of fintech, obviously, that is happening. And then we have a lot of, big financial institutions here, and people are familiar with banking, and they're looking at broken processes and saying, hey, I think I can do this better. I work at US Bank right now, or I work at Wells Fargo, but I can do this process a lot better than what Wells Fargo is doing, and I could provide it to a lot more financial institutions. So I think it's just the ecosystem up here. And right now is a good time to raise venture capital money at the same time. 2018, 2019, all the way up, it's been good. Venture capital is looking at investing outside of San Francisco, New York, and Austin, where it is very expensive to run and operate a business. And your money goes a lot further in the Midwest right now, and the resources are just as good. So I think there's more knowledge around that from a venture capital, private equity standpoint, that Midwest is the place to kind of put your money right now if you want to stretch it and if you want to try and grow with really good resources. And Minneapolis just happens to be one of those kind of great opportunities that VCs are looking to invest in.
Sure, thank you.
Mm-hmm.
Erin, what do you think?
I agree with all of that. We're so lucky in Minnesota to have a highly educated workforce and to be home to a disproportionate number of Fortune 500 companies. So that brings a lot of highly motivated people together to be sharing ideas and coming up with new ways to innovate and disrupt. So I think that's a big part of it. I also think that Minnesota has been smart in recognizing some of the opportunity here. The Minneapolis St. Paul Business Journal, for one, but we have a lot of local organizations that recognize the potential here. Greater MSP is another one that's doing great work in this area. The Minnesota Department of Commerce has been intentional about promoting fintech. And so I think that's really helpful. We are seeing more of this coming out of the South. I don't know all of the reasons for that. It might be that it's a slightly less regulated space in some instances. Also, a history of banking in Charlotte and Atlanta, and other technology developments. But I think Minnesota really has the opportunity to get ahead on this. And so I'm excited to see so many local organizations promoting this, because it will build on itself. As we talk about all of the exciting things that companies are doing, Nick and Cale's companies, as well as the folks we heard from at the beginning of the call, there's some exciting stuff going on here. And I think the more that we realize that and the more that people are investing in that, it will build on itself.
Very cool. Nick, what do you think?
So, I think part of it's kind of cultural. There's like this, Scandinavian kind of heritage here in Minnesota land, where it's like, Scandinavia is known for kind of this like work-life balance and flexible, agile working conditions. And like, that's what tech is all about. But so little tip of the cap to Scandinavia. I'm not from here, I'm from Washington, but that's probably one thing, but everybody's not from Scandinavia that lives here. So then it gets down to all these other things. And then Cale touched on it a little bit. I think there's there's less competition here versus like Silicon Valley. I will say, just dig on Silicon Valley a little bit. Like we build real tech in the Midwest, and they kind of build other stuff out there. So poke in the eye of Silicon Valley. It's not as overcrowded, I think. So like, you know, the cost of an acre in San Francisco is about $3 million, and the cost of an acre in Minnesota is about 20 grand. So it's a little bit different there. I think there's like, you kind of combine cost of living with quality of living. And it's great on both ends of that spectrum. So again, you get more for your dollars here. We pay competitive salaries, like relative to technologists that live in those other areas. So again, you can stretch your money a lot further here. I think there's like an awesome and vibrant education scene in the Twin Cities, you know, with all this kind of like small colleges and large colleges kind of put together, McAllister, St. Thomas, U of M, all of those folks. I think Erin touched on it. Like we've got in the Midwest, there's like, I didn't know this till this panel, there's like 45% of the Fortune 500 is located in the Midwest. Like that's a huge number of really big companies that, you know, I think kind of spit out, eventually people get kind of bored or tired in there, and then they want to go out and kind of pursue their own ideas. So all those companies are, I think, a source of candidates. There's 25% of all computer science grads come from the Midwest. Didn't know that. And we're 7 out of the 10 top affordable states in the nation. So there's some cool things going on there. You could also attribute the weather. When it's cold, just work. So that could be a thing. But I think, you know, place is an interesting concept to riff off of, because as we think about COVID and just how we've all just kind of gone to our houses now instead of the office, although Cale's in the office, it looks like. It's a place, I think, is going to become an interesting thing to play with. Like where a company is headquartered, I don't know that it's really going to matter all that much going forward. I think the new world is one in which workforces are just remote permanently. So it'll be an interesting thing, like where you live and where your company's headquartered.
Right. Speaking of place, for our viewers at home, Nick is in his garage right now. And there, you can faintly hear chickens clucking in the background. That's awesome. That's so cool. Turning it over to the Q&A, Nick alluded to this a little bit earlier. We have our first question from Rich Bracken. When we're thinking of the next layer of digitization, how do you feel user experience and client journey plays into this from a competitive standpoint, especially with banks and credit unions versus pure fintech startup? Cale, would you like to start?
You know, user experience is something that I've spent a ton of money on through the journey of ClickSwitch. I think we had 1.0, which I was designing through like a different, like my own UI. And then we got feedback from banks that, hey, can you put a button here, a button there? We spent so much money building and rebuilding the user experience until we finally landed on something in 2020 that's been working pretty well. But you know, that customer journey, you see a lot of abandonment. Like if you don't have a good customer journey, the customer will just leave and they'll never come back. They're like, what the heck, this sucks, I'm not coming back. And we experience that. We track, where did the customer fail? Where did they abandon? Okay, we have to fit, you know, you have to use your own data along the way and look at that. Don't turn a blind eye and be like, oh, the customer just doesn't get it. No, there's something fundamentally broken that you need to address, and you need to fix that abandonment rate, and you need to do it quickly. So being agile from that perspective is huge. The other thing I will talk about is, you know, these fintechs and neobanks in particular, they're really good. They have really good designers. They're really good at design. If you go into Current or Acorns or Robinhood and Chime, it looks a little different than your community bank that's sitting on an IE browser from 5 years ago. So it's hard to kind of keep up with that. And, you know, some of these fintechs are trying to provide UI advice and UI tools to these community banks and credit unions. They just can't implement fast enough. So user experience and that journey and figuring out the abandonment rate has been critical. And that's why you're seeing a lot of customers, and Chime's open, you know, 250,000 checking accounts a month right now, because they just have a little bit better flow. They provide a little bit better services. They have a SpotMe account. They pay their customers 2 days in advance. And a lot of their customers are living paycheck to paycheck. Banks just haven't picked up on that yet. And so you're going to have to see these traditional financial institutions look at their user experience, look at their products and services, and adjust.
That's great. Nick, what do you think?
Yeah, Cale kind of hit on it. It feels like, before all of this, before 2007, 2008 in fintech, banks didn't have to try that hard. They were the first stop on the customer's journey always. They were just the de facto, they had the customer. There was, because of the trust that they built and all of those things. But then as that explosion took off coming out of the Great Recession, these guys just zeroed in on customer experience. They're like Cale mentioned, they're like design firms, and it's great. And it's forced banks to like kind of wake up a little bit, and then, like you said, challenge themselves to build those muscles. We think about that all the time in our world, and we've brought on a design team very recently in our evolution, and it's paid huge dividends. So like we are the customer's experience. Like, so if we're not designing high quality interactions for they're gonna, again, the customers can, like I said, drop off and go somewhere else, and it's like the water flowing down is the path of least resistance is sort of how these business owners they're choosing speed over price all the time. So if we can equip these traditional folks with all of these great design products and services that enable these interactions to occur, we feel like we're gonna win the day.
Sure. Erin, what do you see in terms of UX and client journey?
I don't have a lot to add to this topic, but one thing I will say is that we have seen some challenges with strategies to increase the personalization of the experience, which tends to rely heavily on customer information. And so there's a lot of risk in that. For one thing, a lot of consumers are very wary of feeling like their business providers know too much about them, and yet they want a really good personalized experience. And then also, privacy regulation changes so quickly. We also have this, weird state by state patchwork, different requirements in the European Union versus the US, and it's continually evolving. And so, any of these processes that rely heavily on, artificial intelligence and other decision making based on, a customer profile, use of predictive analytics and that sort of thing. There's a lot of opportunity there, but it's also an area that we're getting a lot of questions about how to do this right, because there is that privacy risk there too. And for me, the two big focuses of this are just making sure that when you're collecting and using customer information, that you're disclosing the fact that you're collecting it and that you plan to use it. California has this really robust Privacy Act that everyone's been talking about the last couple of years because it's changed quite a bit. But central to that is this idea that people should understand when they're giving you their information, what they're giving you, who you're going to share it with, what you're going to use it for. And so being proactive and letting consumers know what you're collecting about them, even if you're not operating in California, is probably a really good idea right now. And then, of course, the more that you're building customer profiles and things like that, the data security risks go up. If there's a breach of customer information that can be tied to an individual, like social security numbers, passwords and things, that's much higher risk than someone getting into an obscure database that is only used for internal processes, at least when it comes to legal risk under some of these privacy and cybersecurity statutes. So that's one area where I see kind of the growth of the legal industry in tandem with some of the fintech developments.
Erin, just real quick, when you look at just some the UI and like ADA and trying to provide sites for visually impaired, have you seen much enforced from that? Or are you seeing a change there? Because I know we built a new website and we changed our UI, and one of the big thing is like ADA compliance. You got to get a checker on that. So just kind of get your thoughts on what you're seeing there.
Yeah, that's a major issue. So historically, we had seen this cottage industry of plaintiffs' lawyers who would sort of go around to storefronts and then sue business owners for accessibility violations. And that has definitely moved online. So that's something that anyone with a digital platform should be taking seriously. If you don't have the expertise in-house on accessibility, make sure that you are getting a consultant in there to advise you on it. Hiring a lawyer to look at that as well is also useful, but there is definitely risk there, kind of a stick 'em up sort of philosophy. Like a lot of times there aren't real plaintiffs behind this. And this isn't to disparage the intentions of the people bringing these lawsuits, but sometimes it's really just about moving the industry forward, wanting to make sure that things are accessible for everybody. Other times, though, it is really more of a stick 'em up sort of, we caught you, you're not doing this right. And so, pay us some money and we'll go away. So that is a great thing to mention and something that people should be aware of and proactively looking at before you get a consumer complaint about it.
Yeah, no, absolutely. Thank you. Saved me a call to our outsourced counsel, so I appreciate that advice.
Erin, you should bill him.
That's all right.
All right. I'm not seeing any other audience questions. Speak now or forever hold your peace, audience. Okay, we'll just wrap it up with a fun one. What's the best business idea, or any idea, if you have a novel idea, a movie idea, whatever, that you've had but haven't yet acted on? Erin, starting with you.
Okay, well, I have not given up on writing a novel, but I don't think it will be a moneymaker for me. I think probably the best idea that I had that I just did not move forward with or have the capability to even know where to start. When I was a young mom and working pretty long hours, I just wanted more time. And the biggest waste of my time was running errands. It was time away from work and time away from my kids. And I really resented it. So I was using an online grocery delivery service, but it was pretty clunky and the options were a lot more limited than I wanted. I didn't just want to get groceries. I also wanted to get, prescriptions and toilet paper and, everything else that the family needed. So I kept saying, like, I just want one platform where I could do all of this at once. I want to be able to order everything through the same platform from the convenience of my computer. And of course, in recent years, those types of platforms have just exploded. And like, I, for one, use Instacart almost every single day to, add things that someone in the family needs. So I'm happy that the industry has provided a solution to that problem that I had. It's unfortunate that I did not have the wherewithal to pursue it myself. I've been very wealthy at this point.
Nick, what about you?
So super nichey, like old dad sport of mountain biking. There's up in Crosby, Minnesota, Cuyuna area, they just recently redid all of these super awesome trails around all of the old mines up there. And I'm not that familiar with the trails. And so I was up there like 2 weeks ago with a friend of mine and I was like, Todd, I just had an idea. And he's like, what? Because we're like biking through the woods. So the place that we rented bikes from, like if they could just, launch a drone, like fly over there with you, you're communicating with them and they're telling you like what's happening next and where you're going and turn left here and turn right there. And they're just following you around with their little drone. So it's like fun for the guy back at the shop and like fun for you because you feel like you know where you're going. And that could just be a nice little add-on service to the rental. It's like a guided bike tours via drone.
That would be great. Cale, what about you?
So if I didn't start ClickSwitch, I had one more idea. So I thought switching your bank account was a big pain in the butt. The other big pain in the butt is moving and relocating, because you look at, if you move from house to house, you don't want to work with the post office. All your mail's still going there. Your pest control is being set up. Your lawnmower, they're still mowing their yard. Your energy bill's still being pulled. I think there's a play here for a home switch application. So if you move, a one-stop portal to port all the information that's set up at your home and what you need to transfer over to your new home. So I might have just given somebody $1 billion idea. So I appreciate 10% if you actually pull it off. I'll be looking for that.
Very cool. For the record, my idea is the way to save local news I'm a journalist through and through. The way to save local news is if you could get all the local newspapers from around the country on one sort of hub, and then you subscribe to that hub. So you're paying for your local newspaper, but your dollars are going to support newspapers around the country. And that is how you could keep alive some of these little hometown newspapers. So it's a work in progress. No one steal it.
I like it.
Or steal it and do it better. I would rather have all the newspapers survive than make any money. Anyway, we are out of time for today. Everyone, thank you guys so much for coming and bringing your A game. And thank you again to our pitchers at the beginning of this. Everyone did great today. Coverage of today's event will be published on Minne Inno and also in the paper copy of the Minneapolis-St. Paul Business Journal, and it'll be in the Beat email. If you're not receiving the Beat, please sign up. We've got a ton of great news from profiles on companies you might not have heard of to well-reported facts about the companies you've been following for years. The direct link is in the chat right now. Thank you everyone so much for attending, and please enjoy your day.
Thank you.
Bye everybody. Thank you.